How's it going on, y'all? Welcome back to the channel, Quiz Trades. Happy Tuesday. I hope you guys are having a good week. Today I have another fundamentals video for you guys. Today is part 2 of this series. We're going over the fractalized model. I'll be going over the necessities and requirements for the model to have taken place. From there, the phases of price from there, and how price cycles once we put in the model. And then the 3 time frames that you can trade this model based on what account you trade, whether it's live, funded, or just your style of trading. So if you've been watching my videos since June, you could see the progression of the model itself, which is why we're currently on QMT 3. In June, I was trading intraday. Then, July, August, I started trading more daily. And then recently, I've been trading the weekly, monthly. So to begin with, the main necessity you need for the model is a liquidity sweep or a level or a type of manipulation. If you are trading IRL to ERL, for the most part, manipulation happens in a PD array, so which is why we get our liquidity sweep in a PD array. So both of these correlate and happen together. The next necessity is Fibonacci levels, or also equilibrium. This is basically just price has like 4 main things it does. It hunts liquidity, generates liquidity, rebalances price, and then manipulates, sweeps price. So when we are rebalancing price, what we're rebalancing to is a level of equilibrium, which is just 50% of a certain range, and that range will be based on whether we're trading intraday, daily, or weekly. The next thing is our phases of price. So basically what that means is once we put in the model, right, once we get a liquidity sweep, and I'll go over examples after this so you can see it visually and it'll make more sense. Once we get a liquidity sweep in a PD array in equilibrium of a certain range, price will put in that model, will then give us our change in state, will then rebalance, and then distribute. Okay, so there's basically, you can enter 3 times. There's 3 certain entries before the distribution that you can enter off of. You can enter directly off of the model when we put in the liquidity sweep. You can enter after we get our change in state. You can enter after we rebalance, but must be before the distribution because you want to catch the distribution leg. And then the three time frames are right here. As you can see, we have intraday, we have daily, and we have weekly. So the intraday, we base our trades off the 1 hour, 15 minute, 5 minute, and 1 minute. And what we target for the intraday is a daily high. Okay, when we're trading the daily, right, we use the daily time frame, the 4 hour, the 1 hour, and the 15 minute, and what we're targeting is a weekly high. And when we trade the weekly, right, we use the weekly, the daily, the 4 hour, and the 1 hour. For the most part, what we're targeting is our monthly high. So let me go over some examples and just break this down for you guys. One really good example, let me just go to a clean chart. One really good example that we can do is this previous Monday. This Monday we had a very clean intraday model, okay? So if you'd watched my last fundamentals video, you'd already know how price functions itself. And basically what that video is about drawn liquidity. It's the kind of the best way to understand drawn liquidity, instead of going into market and basing our drawn liquidity off confluences, which can sometimes throw you off because there's always going to be confluences for price to move. What we can base it off of is what price is functioned to target. Okay, so and you also have to align that functioning with days of the week, right? And I'll get into that after this. So we're starting with Monday. If you think that this Monday expansion move was random, let me show you. So when we're trading intraday, the first thing, and the reason I say we're targeting daily highs or lows, is because Thursday, right here, as you can see, these are daily candles. Thursday swept Thursday swept Wednesday high. Friday swept Thursday high. So we're going into the market assuming that Monday will sweep what high? Friday high. So we're targeting previous day high. Okay, so that's the first thing. We're targeting previous day high. So we have our, actually I'm going to add that to this. Drawn liquidity. Okay, that you get from, if you watch the last fundamentals video, you get that from understanding how price functions itself. So now we're looking for a liquidity sweep, right? You can go to the 1 hour, the 15, I'm pretty sure. We'll get ES up as well. Why is this not going down? There we go. Okay, we're just gonna have ES open because there's a lot of SMTs. So here we look for first a 1 hour liquidity sweep, right? What you might think is this would have been our liquidity sweep, which is honestly what I was looking for. I had limit orders set at this low right here, but if you don't see any, you have to really look. We swept Asia low, okay? So that's our 1 hour liquidity sweep. So we have our 1 hour liquidity sweep. Now we have to pull out, the next thing we do is we pull out equilibrium or Fibonacci retracement of what range. When we're trading intraday, this is the most important part. When we're trading intraday, you pull out equilibrium of just the previous day. So the previous day equilibrium is what we have to pull out, right? So we have equilibrium right here, and price fulfilled that equilibrium level. Now we have to find a PD array. This down close candle before these up moves is our 1 hour PD array, right? So we have a 1 hour PD array and a 1 hour liquidity sweep. Now we can go down to the 15 minute and look for one more PD arrays to support. So we have this bullish gap that we're holding on the 15 minute. And let's see if we have any SMTs. And this is going into market open, right? So why did price just move? That's weird. So this low, doesn't look like there's, oh, there we go. So we have a 15 minute SMT with these lows right here and this low. So we have our 15 minute SMT. Now, what's the last thing we need? When we go to our little, when we go to our little thing, we have our phases of price, meaning now we're basically looking for an entry. The fractalized model has taken place on the intraday, the 1 hour, the 15 minute. Now the last two things are mainly for an entry. 5 minute and 1 minute are our entry time frames, right? So we can go down to, once we get a change in state, let's go down to the 5 minute. So there's no, like our change in state would be up here, but that's pretty high. Off this SMT, we can get a change in state. So once we close through this up close candle that put in the SMT, we'd get our change in state. So we can wait. So, and again, we can enter directly off the model right here because we fulfilled equilibrium, bullish PD arrays, liquidity sweep. We could wait until we let price play out more, right? Because then we got our SMT. So keep playing out. Here we get our change in state. So you can enter direct, or hello. You can enter right when we close through. You can enter right here. Or what do we see us doing? On the 15 minute, we leave another bullish gap. Scale down back to the 5 minute. Wait for us to tap in. And this is why understanding the fractalized model works best. Because now what will we do? We pull out equilibrium of this entire range. Wait for us to fulfill equilibrium. There we go. And now we can enter again. This is the rebounds phase of price. Okay, so this could be our entry. Could buy in right there. Say we buy in right there. Put our TP at previous day high. And then we let price play out. Market opens. And we hit TP. Just like that. Okay, so that's our intraday model, right? We start on the 1 hour. We find a 1 hour liquidity sweep. We find equilibrium of just the previous day range. We're targeting previous day high. we find 15-minute PD arrays, 5 or 15-minute change in states, and then we can continue to go down, find 5-minute, and even if you wanted to really catch the bottom of this move, right, you could enter on the 1 minute once we pull down into here, enter down here on the 1 minute, and then you could even wait it until we closed through here, because we had this 1 minute liquidity sweep. So you could have waited until we got this change in state again, this up move before the down move. Once we closed through this again, we got a 1 minute change in state, kind of just confirming that this is a model, right? So the trade could have looked something like that, right? Put your stops right at this low, and you target that high. Simple, right? So you get a 90 point to 15, right? Low 1 to 5. Simple, clean, just fractalizing the model. Now, that was the intraday example. Moving on to our daily example, okay? And this would be used when you're targeting week high. I know it's a little like you'd assume that if we're targeting week high, that'd be part of the weekly model, but you have to understand, just like in the last video, how I talked about when we're going through functioning price and we're trying to find what our draw is and what we enter off of, it's the reverse. So if we're getting a daily change in state to one side, we're targeting a weekly high or low. It's the same with this. If you're trading off of the weekly, then your target is month high. Or honestly, that's only best if you're one of two things. If you're entering like the first or second week, or if you know that the week, like for the most part, when the bias is correct, like right now we're in a very bullish bias, it's considered month high because the previous week would have put in the current month high. Then we come lower and then you continue going. But if it's like the first week or whatever, or for the main part, you're targeting previous month high. But if you're already taking out that previous month high, like we have in September, we already took out August high. From now, every previous week high is our month high we're targeting. Damn, long ass fucking ads. So let's get into an example of that. Targeting weekly high is what we're going to do first, and then we can go into month high. So for this month, we have right here. Actually, do I even? Yeah, I think I'll just do most, like just the most current. Or I mean, I could do it here, but this is technically July. Okay, I'll do that for then. Okay, we're just gonna go into this because this is pretty simple. So right now, as I just said, we're targeting previous week high or just the most current high. So it's Tuesday high. We're going into Wednesday. Actually, I don't do that because we kind of, I went over that recently. Here we'll do this. So this is June. So we're trading the daily, okay? Meaning we're targeting our previous week high. So again, when we're trading the daily, we're pulling a range from the weeks. So just as for intraday, we're pulling a range for the previous day. For the daily, we're pulling the range for the previous week. So where is the previous week? Friday, Monday, Tuesday, Wednesday. So from here to Monday, right here. From this Monday, there we go. Shit. Let's see if we pull in 0.3. Nah. Okay. So here we have. Damn, this isn't that good of an example, just because. Because I'm pretty sure this happens because we pull into this entire range. Let me see. This might actually be a better monthly example. Yeah, this is a better monthly example. Okay, hold on. I'm going to just do the most recent then. No, but even that's not that good of an example because all we did was target the high we already put in. Like with this, because where's this low? Friday, Tuesday, Monday. Okay, let me find a better example. This is a good monthly example. Damn, I should have been more prepared with what example I was going to use. This looks pretty good. Monday. So, hold on. Something like that. There we go. Okay, this isn't too bad of an example. We're targeting that high again. Okay, so when we're targeting, for example, this is the entire week range, right? From Monday to Friday. Oh, well, this is actually, yeah, it's Friday. So technically that's this week. So we have from this entire range, right? From this Tuesday, this Friday is where this week ended. We mitigated that high right away. So this is kind of a trade for the next week. So we're going to use the range for the entire week and a half of after we put in the high. So we're waiting for a daily liquidity sweep. So you can see right here, we have this daily liquidity sweep and we have this daily liquidity sweep. So we have our previous day low sweeps. And again, if you remember from the last fundamental video, the only way we can catch, basically what we want to do is catch like reversal points or where price is going from sweeping lows to sweeping the highs, right? Because that's the only way you can actually catch good ranges. So here we have our liquidity sweeps. We have 2 daily liquidity sweeps. Now we need a daily PD array. And we have this entire daily bullish gap that we pull into. And then from this week range, from this Monday to the end of this week, this Tuesday, we have equilibrium and 0.382 fulfilled. As you can see, we don't even close past equilibrium. So then what we do, go down to the 4 hour. You see it's a 4 hour liquidity sweep. We have this 4 hour order block as well. And this is where you decide to enter kind of becomes the main thing. So we have this order block, this 4 hour order block, okay? Also, we don't have any 1 hours. So now it depends if you have the conviction, which, you know, takes market experience, you enter purely off of the model being put in on the daily, right? We have our daily liquidity sweeps. We have our daily bullish PD array. We have our Fibonacci retracement levels fulfilled. Now it's, do you want to enter off the liquidity sweep, the model day, or we can wait, right? Now we go through the phases of price. So again, we already have our drawn liquidity, previous week high. We have liquidity sweep, PD array, Fibonacci level. Now we're going through the phases of price to find an entry. I should write that down. So now we're going through our time frames, daily, right? Daily, 4 hour, 1 hour, 15 minute. So here we get our change in state on the 4 hour. So you can enter from here, right? But it's honestly less than, it's negative RR. So why would you do that? All right, you don't want to take a negative. I mean, you could let it run because now we can pull out standard deviation. And you can see we're most likely going to go, you know, up till here. But just for the sake of targeting previous day high, we would now wait for a rebalance move. So what we can do is go to our 1 hour. Once we get our change in state, we see this 1 hour bullish PD array. So we can wait for price to pull into this 1 hour gap, most likely pull into consequent encroachment of this gap. So yeah, let's actually just stick on the 1 hour for now. I'm probably going to do another fundamentals video. I'm thinking to do about like 2-3 more. I'm definitely going to do one on just like more niche confluences like consequent encroachment, new wave theory, standard deviation, something like the ones that I use that are not just these 3 confluences, because for the most part this is all you need for the fractalized model. or like we can even say these 4 are the only things you need, and we could say like change in state is part of it. So like those 5 are all you need for the fractalized model, but there's still other confluences I use, like using CE of PD arrays, using new Wick theories of Wicks, and then using standard deviation. So I will make another video on that as well. But so here now we're waiting for a rebalance phase of price, which I guess we just don't get, which I mean is fine. This is all we get. I thought we'd pull a little lower, but this is technically your rebalance phase of price, because we sweep London low. Wait, is this like a no New York session day or something? Sunday, Monday, go straight into Tuesday. Okay, I think there's like a bank holiday or something, because I don't see a New York session, which is kind of weird. But this would be the entry then. Thought we'd come a little lower, but I guess because we didn't have the volume too. This is all we get. Probably did pull into a, let's see, at least 618 is what we pulled into, that's for sure. Hold on. Yeah, so we pulled into 0.618. So that could have been your entry off that. And then the thing with this is, now once we get a change in state, now you have a better stop. So now your risk, right? Like, I mean, again, you could wait for this change in state to the upside and then now look for an entry, but there's no need. But what you could basically do now is, even if you enter after this change in state, you can go like that. And now your risk goes from negative RR to 3.2. Or you could enter just off the liquidity sweep, and I guess here after this up move you can enter off that. So once we change state through here, and then have your stop there, then you get a way better risk, and then price takes its time, and eventually we hit TP. Yeah, so this is where we got our turtle soup on the 15-minute, and this is why, like, you can just keep going down time frames if it's aligned with whatever you're trying to trade, and then fine. So this was our turtle soup on the 15-minute in our bullish PD array. We didn't fulfill equilibrium, we fulfilled another level, but that's just because, like, if you trade support and resistance, they use just levels a lot, because if I were to pull out equilibrium of this entire range, we're already in equilibrium. But when you make the ranges smaller based off of just purely after our change in state, then we're still pulling into a certain level of Fibonacci. But when we pull it from the whole range that we've been in, we're still in equilibrium of the entire range. And because that has our bullish PD array and we already had our change in state price, it's not necessary that it's going to pull into equilibrium of this smaller range. But again, this pretty nice. Or you could have just entered off of you could have just entered off the model directly, gone to the 15-minute, waited for a change in state if you didn't want to wait for a 4-hour, which, unless you get an SMT at these lows, you don't really get a 15-minute change in state. Yeah, so you don't even get an SMT, so there's no, like, what was that? NQ. I mean, technically there's 15-minute internal liquidity sweeps, and then we close through that. Or you could just say, like, these are all just different ways you can look at it. We get an inverse gap. I've done this before. When you're very confident in your model, or when you're just very confident in when the market puts in a certain low, I've taken trades where I count a 1-hour refunctioning of price as my change in state. So here candles are continuously sweeping lows. The moment a 1-hour candle, like, the moment this 1-hour candle sweeps a high instead of a low and creates a bullish PD array, I count that as my change in state. So instead of waiting all the way up here, because price will, if it's done this down here, it's going to get your change in state. It's just going to need to structure more price. But if right after the model you're getting a type of, okay, now we're targeting highs instead of lows on the 15 minutes, we're creating a 15-minute bullish PD array, we're inversing a 15-minute bearish gap, you're getting your change of state. Price is telling you that we're now starting to be bullish. This is just for a lot more confirmation. And the thing on that is, here now you're gonna have to wait for another model to put itself in on a fractalized time frame, like the 1 hour and 15, which is fine. It's less risky, but there's also the risk of, let's say you're waiting, let's say you're stern on waiting for equilibrium to be fulfilled, then you miss it. So it's like there's pros and cons to it. It just depends on genuinely how you want to trade, right? Once we put this in and you see a bullish PD array, you can enter off that. Or once you see that and we're now bullish, pull out equilibrium of this level. Oh, even that, we're only pulling to 0.618. But yeah, that's just how you trade the this NQ. I can do that. That's just how you trade it based off of like the daily and weekly. Right, hello. Yeah, for the most part, like trading like this is probably like the most, I wouldn't say the most efficient. It's just like this, it's kind of the staple of this model, because the daily, to me personally, the daily is the most important time frame, because it affects the intraday and it affects the weekly. So we'll go over the weekly example now, which August was a very clean example of that. So let's go over that. Okay, so again, for the weekly, you're targeting previous month high. So July 31st, this is our previous month high, so that's what we're targeting. Now we're going to look for drawn liquidity. We already had that, previous month high. Liquidity sweep. So for on the weekly, we need to find a weekly liquidity sweep. Okay, so we can go to the weekly time frame and see if we swept any week lows. There we go. We swept this previous week low and this previous week low. We're gonna pull this last one out. So we swept that previous week low. Do we have any PD arrays? This down close weekly candle before this up move to put in our high is our weekly order block. There we go. And then we have to pull out Fibonacci retracement from the previous month. So we did come pretty low. We almost took out previous month low, but we didn't. And why is that? Because we didn't get a weekly change in state. Again, watch my last video and that will make more sense to you. So yeah, we fulfilled our, and as you can see, there's a reason that this week did not close through 0.236, but already you can see that the model has put itself in. We had our liquidity sweep, a weekly liquidity sweep, we had a weekly PD array, we had a weekly Fibonacci level that we pull into. So like I said, if you're trading intraday, use the daily range. If you're trading daily, use a weekly range. And if you're trading weekly, use the monthly range. Now we're going to go through the phases of price to find an entry using the daily, 4 hour, and 1 hour. So now we can go down to daily. So here we put in the model, right? Now what we want to wait for is a change in state. That's the next phase of price. So here we have Monday. Monday plays out, and as you can see, Monday just swept Friday high. And I traded this week. It's one of my trade recaps. Because we went from sweeping daily lows to Monday sweeping a daily high, we got our daily change in state. Okay, so either you can enter straight off of here, or you can enter straight off of here. But again, this you're only getting, like, to me personally, trading off of the change in state, you get the worst risk. Right? it's almost always slightly negative RR just because we're at our highest point. So here we get our daily change in state. Now what I do is find 4 hour, because now I want to enter off of the rebalance phase, right? If I'm not entering down here, right, I mean, I can go down to the 1 hour, and you can see we get our 1 hour change in state, which would be the optimal entry, because we have this liquidity sweep. And if I could go back to August, when I took this trade, this is where I would have entered, right? Because we have this up move before this down move to give us our liquidity sweep, our turtle soup on the 1 hour. We're not going, if we're trading the weekly, we're not going anything under the 1 hour, okay? So once we close through this, this could be our entry, right? This would have been most likely the most optimal entry. You can see our RR is back to 3.53. But the thing with that is when you trade the rebalance phase of price, you almost always get a better protected low. This is the most guaranteed protected low because it's our high time frame, our highest time frame weekly model low. But if you trade the rebalance phase of price, as I'm about to show you guys, you will get for the most part, a better RR. So we had the model, we had the change in state. The next day is our rebalance phase of price. There we go. We pull into this 4 hour bullish gap. The thing is, we don't really get any liquidity sweeps here, right? We get this 1 hour liquidity sweep, but when you're trading, when you're aligning these time frames, the best thing to do is when you're trading the weekly, you want to wait for a previous day liquidity sweep because that will always happen after the weekly model. Sometimes you'll get SMT'd, like this happened beginning of this month, which absolutely fucked me, which is the reason I'm the one to blame, yes, but it's kind of the reason I missed my trade was because I got hit with an SMT and I didn't see it until after, right here, for example. This was the weekly model down here, right? We swept. Well, the weekly sweep was this weekly sweep. And then right here was our previous day sweep. So just as like when you're trading intraday, you get a 1 hour sweep as your main liquidity sweep. You'll then get a 15-minute sweep later during the rebalance phase before the distribution. When you're trading the daily time frame, you'll get that daily sweep and then you'll get a 1 hour or 4 hour sweep later during the rebalance. Same with the weekly, you'll get a daily liquidity sweep after the weekly to then, cause the distribution. So here we get our rebalance, right? Again, fractalize the model, pull into equilibrium. So this can be where you enter, right? The thing is though, your stop has to be this protected low, okay? You get a 2.34, not bad. But if you wait for Wednesday candle, we get that previous day low sweep. Now we can go down to the 1 hour, wait for a change in state, which could just be inversing this gap. Once we inverse that gap, or you wait for the actual change in state, which is up here, right, disrespecting an order block. Either of these two can be your entry, and your stop can now be Wednesday low. Why is it now Wednesday low? Because we got a daily liquidity sweep, right? That daily liquidity sweep protects Wednesday low. So we get this daily liquidity sweep. We sweep Tuesday low. So now our stop goes from any entry up here, right? And using and having Friday as our protected low to having Wednesday as our protected low once we get this liquidity sweep. So here we get our change state, or we can wait. Oh shit! Hold on! Damn. Okay, well we didn't get that 1 hour change state. We actually held the order block. But if we were to pull equilibrium of this level once again, we fulfill equilibrium, pull into this inverse gap, and this is where I entered this day, this would have been the prime entry, right? Because now you can bring your stop all the way to Wednesday low and let it run to previous month high. And now you see how that RR changed, right? It's now 1 to 10. Now you can let price play out. There you go. Now Wednesday not only distributes, but we went from sweeping the low to sweeping the high. So this was basically, if you're trading intraday, if you're trading daily, once we got this liquidity sweep, here what we do, if we were trading this daily, we could then go to the 15-minute and wait for this 15-minute change in state. Once we close through this and enter off that, and what that trade would look like is, okay, now we close through this, we can enter on the rebounds phase, right? Because now the phases get fractalized as well. So now this becomes the rebounds phase. This becomes equilibrium of this range. And you can enter your longs off of this rebounds phase after this change in state. This change in state level, this up close candle before this down move to sweep this internal 15-minute. And you can just target previous day high. And your stop can come down to here, right? But when you're trading this on the weekly for real, you stay off of the 15-minute, and you trade after this 1 hour change in state, after this 1 hour change in state, or after this candle closes going into New York. This would be like when you'd want to trade, right? So this is our confirmed 1 hour change in state. We leave a 1 hour gap as well, so you know for now you know for sure we're bullish. So enter off that, stops at Wednesday low, and then we're targeting previous month high. And you can just let price continue to play out. And eventually we will... Alright, bro. Taking its sweet time. There you go. Eventually we take it out. So, again, you start on the weekly, you go down to the daily, down to the 4 hour, you go down to the 1 hour, you kind of just break it down each way, right? You kind of use the previous, and this is why I went through trading all of these versions to get to trading like the week like this, because you just genuinely start to notice, like, damn, this is happening intraday, it's happening on the daily, it must happen on the weekly. Like, it's an algorithm, right? When the model is an algorithm, it's going to happen on every time frame because it needs to happen on every time frame for the market to play out. The market's not going to start trading a new model because it's the weekly, and then because it's a daily, we trade a different model. Like, that makes no sense, right? There has to be a set algorithm, a set model, a set way that the market moves for it to happen on every time frame. Intraday use the 1 hour, 15-minute, 5-minute, 1 minute. Daily use the daily 4 hour, 1 hour, 15-minute, and the weekly use the weekly, daily 4 hour, 1 hour. They build each other up, right? The intraday only goes to the 1 hour. The daily uses a little bit of intraday. The weekly uses a bit of the daily. And like, you can trade month to month if you really want to target yearly high or something like that. But we just haven't had, like, that's just a law. But for the most part, this is best for fundeds. This is best for fundeds, even live accounts. And I would say this is best for swing trading, live accounts. This is what I'm on currently. The frequency is a lot lower. The risks is a lot lower. But if you miss it, you're kind of just sat on your fucking hands until a whole week plays out, or a week and a half, whatever it is. Other than that, I hope you guys liked part 2 of the fundamentals video. I'll probably, I don't know, I have work for the rest of the week, so I might not be able to get another, maybe until the weekend, Saturday, Sunday. Probably Sunday, I'll get another fundamentals video out. I'm thinking to have about like 6-7 videos in this series, so probably by the end of October, or like halfway through October, including trade recaps and just other videos. It should be done by then, but who knows? I'm constantly learning more and adapting more, so there might just be more videos I want to put out. Other than that, I hope you guys enjoyed. Like and subscribe. Comment any questions if you have any. And yeah, I hope to see you guys soon. Peace.